Chapter number 3, Approaches to Budgets. Lecture number 3.4, Zero-Based Budgeting. Let's start our discussion on Zero-Based Budgeting. In short, we also call it as ZBB. Okay. Now, sir, what is Zero-Based Budgeting? It is exactly opposite to what we have learned in incremental budgeting. In the previous lecture, we discussed about incremental budgeting, where we said that we take the budget of the previous period and adjust them for the inflation and other changes to identify the current period budget, or we take the previous period's actual figures and prepare the budget for the current period. But under zero-based budgeting, we always start the process of budgeting from zero. We don't consider the previous period budget. We don't consider the previous period's variances and all. We only consider the real factors. Like every time we start from zero, every time we say, okay, last year budget was for sales was 10,000 units. Actually, we sold 8,000 units. So there is a variance of, I don't care. I don't care about all that. Tell me how many units are we predicting to sell in this current period on market research basis, not on the basis of previous periods budgets and actuals. Tell me, based on your research, how many units can we sell in the market in the current period? Okay, so we don't consider the previous period budgets and variances. We consider the present market factors, and every element of the budget is prepared after considering the real life implications of that, not by considering previous period budgets. That is called zero-based budgeting. So when is it applicable? First thing is when you are preparing the budget for the first time, obviously you have to start with zero-based budgeting. Obviously. Next one, in case if there are any fast moving goods, like you never know when a new product comes into the market. Every time there is frequent updations to the products, every time there are frequent upgradations to the systems and processes, then you cannot follow incremental. There are subsequent changes and there are substantial changes. You have to switch to zero-based budgeting. Every time a new budget has to be prepared based on the market factors. Similarly, if you are having a changing product, or if you are having a changing systems, then also you have to adopt a zero-based budgeting. If your taxation authorities are also changing frequently, like government policies are changing frequently, then also you have to go for zero-based. If there are frequent changes, then you have to go zero-based. Okay. Now, so let's see. Zero-based budgeting is a method of budgeting that requires each element, not just cost, each element of the budget to be specifically justified as though the activities to which the budget relates were being undertaken for the first time, as if it is done for the first time. Don't consider the historic figures and don't consider the past results. Consider if this is your first time, how do you estimate what is going to happen? Okay, on that basis only we have to go. And without approval, the budget allowance is zero. If there is no budget, okay, then there is no approval. If there is no approval, there is no budget. If there is no budget, you should not spend on that. As simple as that. Suitability. It is suitable for fast moving businesses and industries. Discretionary cost can be there. Now, in zero-based budgeting, discretionary cost can be there because every time you are starting from zero, so you know how much cost needs to be incurred and you know how much discretion should be given. Every time you analyze that, how much research and development needs to be done at each time, you can identify that. So, for zero-based, it's okay to have discretionary cost. Public sector organizations like local authorities and all, they should always go for zero-based. See, when the national budgets are prepared, like railway budget or else income tax budget or else your national budget, so all these things when they prepare, they have to go for zero-based budgeting only. They cannot take previous period budget and make the changes that are required, incremental and all. They have to start from zero every period because they have to understand the implications of that. They have to understand how much population changes there, how much inflation changes are there, how people are reacting, and based on what they are expecting, based on that we have to recreate the entire budget. We cannot take previous period budgets for national policies and all. Okay. Next one. What is the process of zero-based budgeting, sir? Common sense, ma. There are 4 distinct stages. What are those, sir? First of all, managers should specify for their responsibility centers those activities that can be individually evaluated. Every manager for every cost center or for every responsibility center, they'll say that, okay, these are our tasks, these are our activities. Marketing manager says that, yes, these are the activities that we do, like Facebook marketing, Instagram marketing, or else brochures, or else it could be pamphlets, or else it could be, direct visiting to the colleges. So they have direct direct visiting to the customers and supermarkets or colleges, whatever it is. So basically they have different activities. So first they'll identify that. Next one, each of the activities is then described in a decision package. So what is decision package? We'll talk about that. Basically, it is like these are the costs that we need to incur. These are the revenues that are expected from that. Okay, for example, if I run a Facebook campaign, for Facebook campaign, these are the costs I should incur. These are the revenues that are expected. So this is the net result of that. Now you take a decision whether you want to go over it or not, whether you want to approve that or not. That is called as a decision package. See, the decision package should state the costs and the revenues, as I told you, expected from the given activity like Facebook marketing. It should be drawn up such a way that the package can be evaluated and ranked against other packages. Like if I run Facebook campaign, this is what I need. If I run Instagram campaign, this is what I need. If I run direct physical marketing, this is what we need. So you can compare them and you can choose, okay, this and this, or else only this, like that you can choose. And each decision package is then evaluated and ranked usually using the cost benefit analysis. How much cost we need to incur, how much benefit we'll get. These resources are then allocated to the various packages. For example, we have a marketing budget of 100,000. Facebook needs, let's say 60,000. Instagram needs 60,000. So I cannot do both at the same time, isn't it? I have only 100. Either I can do this and I can do that, and then I'll have 40,000 for other marketing activities. So once I do cost benefit analysis, I will appropriately allocate the budget to the respective units. Now, a decision package was defined by Peter Fair, who first formulated the zero-based budgeting approach as Texas Instruments, as a document that identifies and describes a specific activity in such a manner that the senior management can A. evaluate it and rank it against other activities, and B. decide whether to approve it or not. Common sense, ma. First thing is, a decision package should have a cost benefit analysis. It should be in such a manner that first I can identify that, okay, this is the activity that is being done and these are the resources that are required. This is what I'll get from that. So that this is the cost benefit analysis, and I can rank them, and then I can take a decision, approve it, disapprove it. So that is a decision package. Okay, what does a decision package do, sir? It analyzes the cost of the activity, states the purpose of the activity, identifies the alternative methods for that activity, assess the consequence of not doing the activity. Like if I don't do Facebook marketing, what will happen? Establish measure of performance for that activity. So how many units of revenue can I generate? How many customers can I generate from this Facebook campaign? So that's the target that I'm setting myself. So all of these are the points that are considered in a decision package. These are all just for your information and knowledge purpose, okay? These are not as such examinable for ACCA. These are just for your knowledge purpose. Now, FIR identifies two types of packages. One is mutually exclusive package and the other one is incremental package. Sir, mutually exclusive means either this or that, either Facebook or Instagram. We don't need to run campaign on both at the same time because we'll have duplication and the cost benefit analysis doesn't work out. So if that is the case, we call them as mutually exclusive packages. Either this or that. You cannot do both at the same time. Or else there are incremental packages. First do this. If you want additional activity, then you can do the second, third and fourth as well if you want. See, these divide the activity into a number of different levels of activity. The package describes the minimum effort and cost that is needed to carry out the activity. Other packages describe the incremental costs and benefits when added to the base. So first, this is our marketing plan. If you want to pitch in more amount into this, you can push more amount into this according to your requirement. Okay, chalo. Now, sir, just as an example, how does zero-based budgeting work? See, a company is conducting a zero-based exercise and a decision package is being prepared for its material handling operations. So for what are we preparing the budget? For material handling. Okay. The manager responsible has identified a base package for the minimum resources needed to perform the material handling function. So bare minimum, the base package. Then we can add incremental if required in the future. This is to have a team of 5 workers and a supervisor. So you need minimum 5 labor and 1 supervisor. Operating without any labor saving machinery. There are no machineries. The estimated annual cost of wages and salaries with overtime would be 375,000. Okay. So this is the base package. I need 5 labor and I need 1 supervisor. Annual salaries are 375,000 including overtime. Okay. In addition to the base package, the manager has identified an incremental package as well. The company could use, they could take on lease 2 forklift trucks. I don't know whether you guys know what is a forklift truck. Forklift truck. Okay. I don't know whether you know that or not, but what it does is basically it has a fork like a fulcrum and it will lift the items. Like basically, have you guys ever operated a well where you need to draw water from the well? So basically what you will do, you will pull and the water will come up. So there is a fulcrum between that, isn't it? So similarly here also forklift, what it will do is it will lift the weights basically. So handling, material handling, from there the material has to be kept here. So basically instead of labor doing this, the forklift will pull it and push it here, or else it will help you in placing that on a carrier so that you can just trolley kind of a thing, all that stuff. Common sense, ma. So you can lease it at a cost of 20,000 each year. Then this would provide a better system because material could be stacked higher, like you can keep it one on top of another. Suppose labor is there, so you cannot throw it and keep it, right? You can only go up to a maximum level, but if there is a machine to do that, it will keep it higher and higher. If you go to this Walmarts or what is it, not Spencer's, if you go to Walmart or Metro in India, Metro or else Walmart in other countries, you can see that there are huge stacks of items. Like if you are able to see that, usually you don't get access to those stuff, but if at all you get access, you can see that one on top of another there is almost all 40-50 feet of items. Human being cannot actually lift something for 40-50 feet and place it over there, a heavy weight. So they use this forklift machines and all. Okay. Health and safety risk for the workers would be reduced, and there would be a saving of 5,000 each year in overtime payments. So if you use if you could lease 2 forklift trucks, so for at a cost of 20,000 each year, so you will get 20,000 incremental cost, and at the same time you will save 5,000. So there is a net incremental cost of 15,000. Okay. Another incremental package has been prepared in which company introduces a new computer software to plan materials handling schedules. Cost of buying and implementing the system would be 60,000, but the benefits are expected to improve the efficiency and reduce production downtime, results in saving of 10,000 each year in the overtime payments. Okay, so if you introduce another computer system, you will save 60,000. You will have to incur a cost of 60,000, but every year you will save $10,000 in the other downtimes and other stuff. The base package would be considered essential, so the highest priority will be given. The incremental packages can be ranked against each other, and if possible they can take both if the budget permits. Otherwise they can choose any one, or they can ignore both as well. So these are incremental. Now you need the basic. Essential is basic. If you want, you can choose any of these two, whether to hire the forklift truck or to stick with the labor. So it's up to the company again. Okay, so that's an example of how zero-based budgeting works and how incremental packages work. Now sir, advantages, very quickly. What are the advantages of having zero-based budgeting? So every time you are starting from scratch, so there is no carry forward of mistakes or carry forward of non-value adding items from the previous budget. So all the inefficient and obsolete operations are identified and they are removed or they are bettered, right? Their efficiency is increased. Next one, zero-based budgeting leads to increased staff involvement at all levels, because you need to know, every time you need to know how many units can be produced, what are the requirements, what are the resources required, or what cost is incurred. So every time you need to gather the information, you call the people from those respective departments and talk to them. So their involvement will increase and more communication and motivation will be created. It responds to the changes in the business environment. Any change in the environment, your budget also changes. Knowledge and understanding of the cost behavior pattern of the organization will be enhanced. Now, see, instead of just taking previous budget and adding changes to this, you are actually identifying the cost elements every time you prepare the budget. So you get a better and better picture. Okay, what is the variable cost? What is fixed cost? What are changing according to the units? What are not changing? How much of these fixed costs are actually fixed and how much of them are semi-variable? So you will get a better understanding of the entire cost system of your organization. And resources should be allocated efficiently and economically, because you are starting from scratch. Every time you are careful not to allocate too much budget to anybody. Now disadvantage, sir, first of all, it involves very high cost, because it takes too much time and you need to have a very lengthy process, elaborated process of designing the budget, and it is only for short term. It cannot be for a longer period of time. Only for current period only you can create a zero based. Again, next period again another zero based budget has to be prepared. So that's a tedious task. Then it might become too rigid. Since you are starting from scratch, you might say the labor that okay, only this is the budget that is given to you this time. So it might become too rigid. Okay, And second thing is that you are creating a budget in such a manner that based on your expectations you created a budget. What if suddenly a new opportunity comes in the market? What if there is a sudden change in the market? Your budget might not help you take up that change. For example, there is suddenly a new technology, but your budget is already allocated and you don't have sufficient funds. You cannot purchase the new computers or new softwares or new technology that is required. So that might happen. There is a need for management skills. Like management should know how to prepare the budget, how to start from zero every time. Managers may feel demotivated because of the large amount of time that is spent on the budgeting process rather than on actually implementing those budgets and identifying the variances. It is difficult to compare. Why, sir? Because every time you are re-preparing a budget, how can you compare one budget with another budget? One level of activity with another level of activity? You cannot do that because every time new budget comes into the picture. There is no comparison as such. Ranking of packages may be subjective where the benefits are of qualitative nature. Suppose, see, in this particular case, now there are two incremental budgets. One is to hire lease a forklift truck. Other one is to get a computer. Both of them have quantitative benefits, like one will reduce the cost by 5,000, another one will reduce the cost by 10,000. So you can do cost benefit analysis. But there are some things like, for example, a budget needs to be introduced where we will plant trees around the factory. So what is the benefit out of that? The benefit is not productive, like it's not quantitative, it is qualitative. Planting trees across your factory, nearby your factory, will enhance the oxygen levels. It will absorb the carbon dioxide. They will reduce the pollution. They will increase the chances of rain. Your employees' health will be improved. These are all qualitative. You cannot measure these things. So then how will you evaluate the cost benefit analysis? You cannot do that, or it will be judgmental, or it will be subjected to bias as well. Okay. So these are the advantages and disadvantages, and that, my dear friends, is zero-based budgeting. Right? See you in the next lecture with rolling budgets. Till then, take care, guys. Bye-bye.